a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about the best performing ETFs of the first quarter. So first quarter was good for stocks, and stocks continued their uptrend, but there was a lot of volatility and there was so much going on: Reddit rebellion, Bitcoin, and so many other things, chaos caused by Archegos fund. And there was a lot of optimism generated by acceleration of vaccine rollout. So investors expected the economy to rebound strongly later this year. So that is why they rotated out of the earlier high-flying stocks into some of the cyclical areas of the market that benefit from the economic recovery. So during the quarter, the Dow rose 7.8%. The S&P 500 returned 5.8%, and earlier best performing Nasdaq that gained 2.8% during the first quarter. And energy, which was the worst performing sector for the past many years, that rebounded strongly and gaining 33%. Finance was the second best performing because banks benefit from higher interest rates. So finance was up 18%, and utilities was the worst performing sector with a gain of 2%. Now, stocks have started the second quarter on a very strong note, and investors are going back into technology stocks. Now, tech stocks have done very well in the past few days of the second quarter, but it remains to be seen. And I think it makes sense to hold both tech, which benefits from the secular growth trends, and cyclical areas that benefit from the economic recovery. So as I mentioned, stocks have started the quarter on a strong note. That is thanks mainly to optimism generated by the massive infrastructure plan and also the blowout March jobs report. Now, looking at the best performing areas of the first quarter and year to date, these are very interesting niche areas: shipping, marijuana, and blockchain. And I have talked about cannabis and blockchain, Bitcoin and blockchain in the past weeks' videos as well. So, but I wanted to talk a little bit more about the shipping ETF because that's a very interesting area. And we all read about the blocking of Suez Canal, which is a crucial global trade route which was caused by a ship which is as long as the Empire State Building is high. But shipping has been hot even before that blockage because of supply chain disruptions caused by the pandemic. And container shipping rates have more than tripled over the past year. That is according to the Financial Times. And that's mainly because thousands of empty containers were left stranded in Europe and the US in the first half of 2020 when shipping lines canceled hundreds of ships because of coronavirus caused lockdowns, which caused a sudden plunge in global trade. And when the demand rebounded, particularly for PPE and other stay-at-home goods, then there was a lot of competition among shippers for available containers that sent freight rate soaring. Now let's take a look at these three ETFs from these three best performing areas. So the first one I'm talking about is the Breakwave Dry Bulk Shipping ETF, ticker symbol BDRY. It is the first and only freight futures exchange traded product, and it holds dry bulk freight futures contracts. So be aware that it will suffer from contango issues. Rather small ETF because it's a very niche ETF, very specialized area, 46 million in assets, and quite expensive because of that niche exposure, 3.32% expense ratio. This has gained 120% in the first quarter. Now let's take a look at this ETF by going to the quote page on Zacks.com. You can read our research reports, articles, and go to the external homepage by ETF MG Group. This talks more about this ETF. So this focuses on dry bulk shipping, and you will see that it will hold those shipping futures expiring in April, May, June. So this will be a very volatile ETF, and this will also suffer from contango issues. So not exactly suited for buy and hold investors. If you want to invest, be aware that it should be treated more as a trading tool or a short-term holding. The second one I wanted to talk about is the Amplify Seymour Cannabis ETF, ticker symbol CNBS. And I have discussed cannabis ETFs in recent weeks, and because their outperformance due to optimism generated by legalization, and New York recently became the latest state to legalize recreational marijuana. This is the best performing pot ETF this year. This is actively managed by Tim Seymour, who's a co-host of CNBC's Fast Money, has an expense ratio of 75 basis points and has 143 million in assets. It has gained 67% this year. Other pot ETFs too, like the one by Global X and the one by ETFMG, they have also done quite well this year. Now again, to learn more about this ETF, you can go to the quote page on Zacks.com. I also did a podcast with Tim Seymour. You can listen to that. And then you can go to the external homepage. You can learn about more details and its holding. So you will see that Canopy Growth, Afria, Silver Spike Acquisition Group, Village Farms, GW Pharma, these are the top holdings in this ETF. And again, cannabis ETFs are also going to be more volatile than your plain vanilla ETFs, so be aware of that. The third one I want to talk about is again by Amplify. It's the Amplify Transformational Data Sharing ETF, ticker symbol BLOK. Now we all know that Bitcoin has been very hot over the past few months, and this year also it is up more than 90%. There is no Bitcoin ETF in the US as of now. Canada has approved some Bitcoin ETFs, and their first Bitcoin ETF, which was approved recently, that has already gathered more than 1 billion in assets. Now, 7 providers in the US have filed for a Bitcoin ETF, and many are hoping that we will see a Bitcoin ETF this year. And just yesterday, GBTC, Grayscale, which manages GBTC, the world's largest cryptocurrency fund, they also said that they will be converting, they have plans to convert or intention to convert GBTC into a Bitcoin ETF. So hopefully we will see a Bitcoin ETF this year. But till then, blockchain ETFs have been very hot. Blockchain is the technology which underpins Bitcoin and other cryptocurrencies. Now, this is the best performing blockchain ETF. It focuses on companies in blockchain technology. This is also actively managed, 70 basis points and pretty large, popular, 1.2 billion in assets. That's mainly because of its performance. It is up 60% this year. Again, to learn more, you can go to the quote page, and from there, the external home page, you will see the holdings and other details. You will see Galaxy Digital, Marathon Digital, Voyager, MicroStrategy, Hive Blockchain, Riot Blockchain, PayPal, Square. These are the top holdings in the ETF. You can look at the sector exposure and other details too. Now, on the last slide, I have the comparative past year performance of these 3 ETFs versus the S&P 500 index. And you will see that the blockchain ETF is about 300%. The Cannabis ETF is up about 260%, and the shipping ETF is up about 180% over the past year. But you will see a lot of volatility. Before that, the S&P 500 index has gained about 60% during this period. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and I'll see you next week.